showing up. Let's go and see financial press releases. Oh, first quarter result. Here we go. All right. So grew revenue to 4.6 billion. Okay. So that is a huge beat on revenue. Remember, analysts were expecting 4.08 billion. Let's go back to here. So 55. We had adjusted. Okay, so adjusted revenue. Sorry. Net revenue. So adjusted revenue to 4 billion. So actually, in line with guidance there. Net income to 2.8 billion. I'll have to see what that is. What's that per share? Okay. GAAP diluted, adjusted diluted EPS. So actually just under the guidance there, $89 per share, and 4 billion. So this actually would have beat the guidance that, again, I showed you it was revised up from when I did my earnings preview. It was about 3.97 was the analyst consensus. Then it was revised up to 4.08. So 4 billion here. Now it does say actually 4.5 there. So we'll have to see what the adjustment is. That might be something that we'll actually have to listen to the earnings call to see. Let me just go through here for a second. So closed loan origination volume. Okay, so yeah, so they did hit the high end of their guidance there, and gain on sales margin came in actually a little lower. So gain on sales margin came in at 3.74%. Net rate lock volume at 95, and AMROC 348, 13.6. So they don't give guidance specifically for these segments. But let me just see, increased. Okay, let's go. Let's take a look at this. First quarter highlights. Grew total revenue to 4.6 billion from 1.4 billion in Q1 of 2020. Net income to 2 point. So, obviously these numbers are going to be big year over year. That's not a huge surprise. Let's see, closed loan origination volume. So this actually, I guess you could say, beat the high end of their guidance, because the high end was 103, and they came in at 103.5. Not a huge beat there. But it's interesting that the gain on sales margin came in lower there. AMROC title insurance up 110% year over year. So it's good to see this is still going strong. That actually probably made up. So the auto segment, let's see, grew 65% as well. So I actually would imagine the auto segment and AMROC made up for some of this drop in gain on sales margin, because 3.74%. Let me just do some quick math here. Let's see if we can get a calculator. So we had gain on sales margin was 103.5, and let's see, times 4. What was it? 3.75. 3.75. Oh, sorry. Got to go back. Let's clear that. We got to do it as a percent. 1035 times 0.0375 equals. So that would have given them 4.1 billion. So actually, pretty much in line there with the margin. So most of their revenue did still come from, and sorry guys if you can't see this, I should have been zooming in here. Sorry, I'm not looking at the chat. So let me just double check, see if there's any questions in the chat. Did they announce a dividend or share buyback? Nowhere. Let's see. All right, let's go back here. Okay, so highlights platform, 60 million unique visitors, so an increase of 72% year over year. Again, not really liking the year over year comparisons in this case. I know that's just kind of what they do in general, but obviously You know, pretty much since Q2 of 2020, everything's just been crushing year over year, so it's not a huge surprise. Rocket Homes 300% increase in Q1 of 2020 as compared to Q1 of 2021 as compared to Q1 of 2020. So that's pretty significant there. Net client retention rate was over 91. This is just something that Rocket crushes every time. This honestly is like probably 50% of the reason why I am bullish on Rocket. Their client retention rate is just ridiculous, and over time, you know, I think it's over 4 times the industry average. So if you think about it, over time, it's basically inevitable that they'll continue to gain more and more market share over time just as a result of this. If 91% of the people are staying with them when they refinance, and most of their competitors, their retention rate is less than 20% or right around 20%. So only about a quarter or less than a quarter of them stay with their competitors, whereas almost all of them stay with Rocket. That's just something that's going to pay dividends for them much further down the road. 45,000 real estate signed up. Rocket TPO initiated a sponsorship with Chevrolet. I really want to see if they mentioned the UWM ultimatum. Look at their broker segment. Our best class. So we got platform development. Rocket Logic. So Rocket Logic. Okay, so this is good. During the first quarter, more than 1/3 of our loan volume was processed through Rocket Logic, contributing to overall turn times decreasing by 31%. So they're able to decrease the amount of time it takes for them to process a loan by 30%, which I don't have to tell you is pretty awesome there. So, and right now only 1/3 of their loan volume was processed through there. So imagine if all of their loan volume was processed through there, which they're trying to, you know, get more and more. I think last quarter it was something like 20% was processed through there. So you can see they're increasing that slowly as we do that. This, I talked about this. I did a video on this. This is why Dan Gilbert converted those shares, and almost 100% positive why we got that block trade from Morgan Stanley as a result of this. Additional achievements. Okay, so here's their guidance. Okay. Closed loan volume between 82. So they are guiding significantly lower for the next quarter. This might be why we're seeing the stock drop significantly here. So 82.5 to 82.75. Let's just use kind of the midpoint of that. Go back to the calculator here. So let me just see. We have, we'll use the midpoint of their guidance for the closed loan volume and the percent. So we'll do, wow, that's a pretty big drop on gain on sales margin there. The high end is 2.9. Okay, let's do this math. So it's like 85 billion at a 2.75% rate or so. Let's see here. So 85 times 0.0275 equals 2.33 billion. Let's see what this guidance was. Oh wow. Okay. So this is definitely, let's see, did I do that math right? Because that seems like a pretty significant miss on the guidance there. Let me do this calculator again. Let me go here. So we have, I think I did it right, 85 billion, right, is the midpoint of the guidance for closed loan. Let's just say 2.8. 2.8% is the midpoint for gain on sales margin. So 85 times 0.028. Wow. Wow, this is pretty bad, guys. Gain on sales margin dropping significantly. This is basically, if we look at just the fourth quarter of last year, 4.4 all the way down to under 3 that they're guiding here. And this is a significant drop in closed loan origination volume. I mean, you can see analysts were expecting for next quarter, average estimate, next quarter, June 2021, average estimate was 3.41. Even the low estimate is 2.51, which is higher than the midpoint of their guidance. That's a pretty significant drop there. And, you know, I'm not going to do the calculation right now to try to get their net income, but, you know, well, actually we can do that. We can do that really quickly here. Let's just do that calculator. So we have, let's just get a quick ratio here. So 4.08 to 9 are 90 cents per share. So let's just do 408 divided by 90 is 4. Actually, I think I'm doing that wrong. I got to do it the other way. Well, I'll do that calculation later because I think we're going to have to take into account some other things there and check out the rest of their guidance. Let's go through the rest of this report, see if they do mention anything. Okay, where's their broker? Let's see if they give any guidance on their broker segment. Partner network. Rocket Pro TPO. Okay, they don't really give any guidance there. Balance sheet liquidity, first quarter earnings call. And then we just get into the financials here. So yeah, that guidance is just, that's killer in a bad way. Close loan volume 82 to 87. Even the high end of their guidance would probably give them, you know, a revenue of maybe 2.7 billion and a profit, even if we use the high end of their gain on sales margin here, maybe a revenue of 2.9, if that. I doubted it would even give them a 2.9 billion in revenue. And you can see expectations, average expectation. We had the high expectation was pretty much what it was, and that's where I was saying, you know, it would be nice for them to say that, but it would seem from these earnings that really the effect of UWM's ultimatum, at least for the next quarter, is not going to be positive. So we'll see what happens with that. Let me see if there's any questions in the chat really quickly before I go any further. Let's see, just joining. EPS, bad earnings. Do you think the call? It's possible the call could improve the outlook here, but really they would have to do they have to do some explaining. They have some explaining to do on this guidance here, because this is just bad guidance. I mean, what is this? They did in this quarter 103 billion, and that's dropping by more than 15%, or about 15%, which this and combined with this, that's just you know, and really I almost want to do that calculation again. I hope I did that right, but basically it seems about right. I mean, 2.9%, yeah, it's going to be about 2.3. So that's just really, I think I would say the main thing killing the stock right now is the guidance. Let's take a look at where it's at after hours. Wow, down 12%. You know, it's a good thing if you guys, well, if you guys were in my Discord, I'm not saying, I called this or anything. I actually was hoping it would go up. I was, I do have long calls, call spreads in this stock, but they're for 1 to 2 years out. And I did buy some short-term puts. I bought the 22, I bought several 22 20 spreads, 22-20 put spreads. So those should hopefully cover a lot of my losses from my calls. So probably not going to make a profit off of that, but at least a nice hedge there. But yeah, that guidance is really just gonna, it's not going to be good for the stock there. Now I will, like I said, probably going to end this pretty soon here in this stream, but I will listen to the earnings call. For any of you that don't know, it does start at 4:30 Eastern, so West Coast, that would be 1:30. We'll see if they explain maybe what's going on with the guidance. I really want somebody to ask on the call, how this ultimatum, how the results of that is affecting their guidance, because from what it seemed from their Twitter, from everything that they were putting out, they were just gaining market share hand over foot from UWM from that ultimatum. They kept tweeting out quote after quote from different brokerages just saying, hey, this is terrible, we're not working with UWM. They said their broker channel was getting like 500% more calls and leads and whatnot than it was before. But it's not reflected in the guidance here. I'll just say that. Now, one thing that could be going on, and I'll just finish it off with this, they could very well be expecting rates to rise significantly. And it would seem that, especially with comments from Janet Yellen recently and how the market's been behaving, it would seem that the market kind of expects rates to rise as well. So, Rocket, they obviously have their ear to the ground in the rate industry, right? Because that's their business is loans, right? So if they see something, if anybody's going to see something coming before the rest of us, it's probably Rocket, right? And so most likely, the only explanation I can see, other than the fact that the UWM ultimatum may have affected them negatively, is that Rocket expects rates to rise significantly, and that could affect refinances significantly, obviously. So that is the only reason that I can see that they're expecting revenue and closed loan volume to come in this low. And honestly, I wouldn't be surprised if rates do increase, right? We did see again a drop here, but there's been a lot of people putting pressure on the Fed to increase rates. You guys saw what the crazy stuff that happened with the bond market about a month ago, 2 months ago. But yeah, that would be the only explanation I can see for maybe these numbers here on the guidance. Let me just double check the chat one last time. We'll go back up tomorrow morning. Who knows with the earnings environment that we're in. Like I said, Apple and Amazon, in my opinion, crushed their earnings and their stocks went down. So we'll see. What about the share buyback they mentioned last quarter? It doesn't look like they mention anything in here. They do have to disclose that. Let's see. I did kind of rush through this top part fairly quickly, which represents an annualized run rate. It doesn't look like they bought back any shares. And I'm not surprised personally, because I honestly think a lot of that share buyback is meant to buy back shares, either one, as rates rise. I think they announced the buyback. It's for 2 years. They expect rates to rise significantly. And they know that long term, that's going to be actually potentially a positive for their business as they gain market share, but they know in the short term their stock could suffer, and so they may use it to buy back shares while any short-term investors are getting out. I think the other reason for that buyback is to buy back some of the shares that Dan converts. Now, this recent one doesn't look like they did, especially with that block sale from Morgan Stanley. But a $1 billion buyback when your market cap is now just over $3 billion, you're not going to buy back a third of your shares, right? So it would seem to me that they expect more shares to be out on the market in over the coming years. And I think Dan does actually have more plans to give more money to Detroit for the revitalization of their housing market. So maybe that's part of it as well. But yeah, anyway, main idea here is, in my opinion, what's pushing this stock down right now is the guidance, and I think it's warranted. I mean, this guidance is pretty bad. Now, long-term, if you're a long-term investor, this could potentially be a buying opportunity. Like I said, rising rates long-term are just going to help them gain market share, at least from what I can see, and from what they've said on countless earnings reports and interviews and things like that. Short-term, though, it is going to affect the stock. So, we'll see. I'm still going to probably just hang on to my calls, probably sell my puts tomorrow and take the profit on there to kind of offset some of my losses. But yeah, their guidance came in significantly lower than analysts' expectations. So we'll have to see what happens. Anyway, the earnings call is about to start, so I will let you guys go to listen to that. I'll listen to that myself. And like I said, I will let you guys know if I hear anything significant in that earnings call. Probably do a video either later tonight or tomorrow. And other than that, thank you guys for watching. Thank you guys for commenting in the chat. Love to have your questions. And other than that, obviously, don't forget to like and subscribe. And have a great day. We'll see what happens tomorrow. See you guys.